You know, when we hear Larry Fink of BlackRock saying he wants to tokenize everything, you know it's big because it takes a lot to move the needle at BlackRock.
Cathie Wood, CEO of Ark Invest, just dropped a crazy theory, reiterating that she still believes Bitcoin reaches 1.5 million in 5 years. Smash the like button if you're concerned about Bitcoin's price being at 80,000. Right now,
I want to start right with Bitcoin and what you see as the outlook for Bitcoin's price. In recent weeks, you've come out and said $1.5 million per Bitcoin by the year 2030. Since then, though, we've seen quite a few outflows. We've seen a lot of volatility. Sonali just went through that. Is that still your view? 1.5 million by 2030?
Yes, it is our view. I think right now we're in a risk-off period generally. And if you've been watching Bitcoin, it's almost been a leader in terms of risk on, risk off. So I think that's what we're seeing. If you look at our on-chain analytics, what you will see is that we are in the middle of, we're a little bit more than halfway through a 4-year cycle. We think we're still in a bull market. And we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class. And we think by putting it in portfolios, risk-adjusted returns for the entire portfolio will go up.
Increase. Hey, altcoin, Chronicle Nation. You must sign up for the Bitcoin Reward Credit Card. By our partner, Fold, you use USD on credit and stack actual Bitcoin with every transaction. Reserve your spot today. Only so many waitlist spots are being taken. This is us only. This is the ballerist way to stack Bitcoin. You pull out this sweet metal Fold credit card, and you get real Bitcoin. This is better than AMX. This is better than Capital One. Use my link below and get on the waitlist immediately. So, reason number 1, why is Ark Invest so sure that Bitcoin is a great buy right here? See, she knows what you and viewers to this channel know. 3 huge ideas. Number 1, the United States government is going to keep on buying as much Bitcoin as they can in a cost-neutral fashion. Boyne's Trump's
Well, you know, we delivered on the president's promises that he made on the campaign trail. You know, the president was adamant about creating the SBR. We wanted to make sure that we did it right in a way that respected Bitcoin for being so unique, and also gave credence to innovation in other spaces of the digital asset world. So, you know, for us here, we look at Bitcoin, it's not a security, it's a commodity. It has intrinsic stored value that's traditionally accepted. It has, as David likes to describe, the immaculate conception. There's no issuer. And you know that's why, as you saw in the executive order, we compared this to digital gold. It's something that's imperative for the United States to have, retain, continue to build on. And I think that's worth pointing out that you know the way that this is constructed, we talked about ways of acquiring more Bitcoin in budget-neutral ways that won't cost the taxpayer a dime. And what I like to say about this president, I think it's high time that our president started accumulating assets for the American people, which is what President Trump is doing, rather than taking it away. And I think that's one thing that we really wanted to make clear in this executive order, and we're looking forward to working with our partners at Treasury and the Secretary of Commerce in order to find those budget-neutral ways in which we can acquire more. You know, I've been asked all the time, it's like, how much do you want? And I said, well, that's like asking a country, how much gold do you want, right? I mean, as much as we can.
Reason number 2, Bitcoin lingering at these price points. With this kind of bullish macro backdrop is a historic entry point. Essentially what Michael Saylor describes right here. I don't believe most.
This is kind of historic entry point because all of the risk has been stripped off the asset. Like, you pretty much know Wall Street's going to embrace it, the U.S. government's going to embrace it, and banks in the U.S. going to embrace it, which means that all the other banks will embrace it. You already know all those things, and yet the market is really skittish based upon concerns about tariffs, you know, the disposition of the U.S. economy, the interest rate forward graph. And so you see the interest rates have pulled in 30, 40, 50 basis points. And we're in this macro risk off zone. When that flips, I think Bitcoin will rip forward with a vengeance.
Reason number 3, Fed rate cuts. Everyone is forecasting that the Fed is not going to reduce rates. They're going to keep quantitative tightening, is what everyone's contemplating presently. And though the Fed may not cut rates tomorrow, Arvest actually believes that the Fed cuts rates more than the majority of people anticipate this year.
What do you see as the rate path for this year? The Federal Reserve kicking off its two-day policy meeting today. We're going to hear from Jay Powell tomorrow. How many rate cuts do you see happening this year, Cathie?
Well, we tend not to be very short-term in our focus, but if we're right and inflation is going to surprise on the low side of expectations, we wouldn't be surprised to see 2 or 3 cuts. Now, if you look at an indicator called Trueflation, it's probably the broadest measure of inflation out there. It is saying inflation is down to 1.65%, well below where the Fed is pinning it at roughly the CPI's 2.8%. And we believe that the combination of actually food prices have started coming down. Even egg prices have started to collapse, as a matter of fact. Gasoline prices are coming down. We're seeing some rent prices coming down. So we think inflation is going to surprise on the low side of expectations for those reasons, and because innovation is inherently deflationary. And our 5 innovation platforms are all driving different kinds of deflation, good deflation, which will cause unit growth, but deflation nonetheless. So we think the Fed is going to have many more degrees of freedom in the second half of this year than most people think. We could see more than the number I just suggested, 2 to 3.
200K by 2025 end. Most failed to realize is Bitcoin could quite easily still reach $200,000 by the end of this year. And this isn't just based on Cathie Wood or me, Matt Hogan. The CIO of Bitwise indicates he's fairly certain Bitcoin reaches 50,000, if not 200,000 plus.
There's the strategic Bitcoin reserve. There's the SEC pulling back on essentially every lawsuit. There's progress on stablecoin legislation. There's talk of market structure legislation. There was the White House crypto summit. These are game-changing positive developments that should put Bitcoin trading at $150,000 or $200,000 today. It's been suppressed because in the short term, this overhang of the economic uncertainty is weighing on the markets. I think if that is released, we're at new all-time highs quickly, and we're on our way to where I think we'll be at the end of the year, which is Bitcoin 200,000.
If we get to Wednesday's meeting and it looks like we're not going to see much relief from the government here in the United States, what happens?
If it's sort of the tough parent, stiff upper lip thing, I think it's going to be more market uncertainty. You could see Bitcoin go back to, 72,000 to its previous all-time highs. I don't think there's downside really below that. I think there's a great deal of support right there.
I don't believe there's side really below that. I believe there's a lot of pay attention to these 3 coins support right there. And overall, there is a lot of risk in crypto. Many coins will fail. Many coins will succeed. If you want to reduce risk, just buy Bitcoin, Ethereum, and Solana. At least according to Cathie Wood, she says these are her top 3. Make sure you subscribe to Altcoin Chronicle for daily crypto videos like this.
Cathie, even some of the people who believe most firmly in the crypto story here, they are still worried about those meme coins and a lot of retail investors being stuck holding the bag. And another thing that's happening at the same time is you have a lot of exchanges looking to loosen their listing standards. Do you worry that this could go too far, that too many coins that are going to hurt retail investors ultimately will be listed on too many exchanges?
Well, I think that the SEC did a very important thing in declaring these meme coins not securities. What they essentially were saying is, we are not going to regulate them, and it's buyer beware. And so if I have one message for those listening who are buying meme coins, buyer beware. And I think the message is loud and clear from the regulators. What we think will happen is there will be some fearsome declines in the prices of some of these meme assets. And, there's nothing like losing money for people to learn. And they'll learn that the SEC and regulators are not taking responsibility for these meme coins.
Buyer beware of what specifically? Because you did say that you believe that there are only certain crypto assets that will gain the most spoils. What do buyers need to be aware of?
That the millions of meme coins will probably end up worthless. So when we're talking about the big three, we're talking about Bitcoin, Ethereum, Solana. The use cases for those are multiplying. And we think they're going to become very important in the years ahead. Meme coins, not so.